Welcome back to Worldwide Exchange. Investing inflows into ETFs, they hit an all-time high of $915 billion for a calendar year yesterday, breaking the 2021 record of $911 billion, according to data from VettaFi. The bullishness around the election, of course, that's been a key factor. In fact, if investors maintain this same post-election enthusiasm for the rest of this year, ETF inflows, they would exceed a major milestone, $1 trillion, according to a forecast from VettaFi. Two of the most popular ETFs, the SPY that tracks the S&P 500 and the QQQ that tracks the NASDAQ 100, they're also both on pace for record inflows as both of those indices are trading near all-time highs. According to State Street Global Advisors, ETFs, they gained more than $58 billion post-election, with the overwhelming majority going towards U.S. equities. Joining us now to look at this record year for ETFs and what it says about the current investing climate, Todd Rosenbluth of VettaFi. Todd, good morning. Great to have you on.
Good morning.
Todd, we always like a guest like you. You're bringing us some news. So it's a record year for ETFs, breaking the previous record set a couple years ago. What does that tell us? What does that tell us about investor sentiment and the current climate?
So equity investors have been increasingly turning to ETFs. We've seen flows in the first half of the year, but they've accelerated since the election. Adoption of ETFs has been growing. We've seen investors move from mutual funds to ETFs, individual stocks to ETFs. And the data that we have at VettaFi shows that trend is likely to continue. We asked advisors, investors, their expectations for the next year, and ETFs remain top of mind for them. We're seeing broad demand for those S&P 500 or the NASDAQ 100 ETFs that you talked about, but lots of other success stories as well. It's a really exciting time to be in the ETF industry.
All right, so lots of other success stories. I would imagine a lot of them are surrounding the so-called Trump trade. I know one of them is the IWM. That's an ETF that tracks the Russell 2000. What are you seeing there?
Yeah, we've seen small cap investors turn to ETFs. IWM, as you mentioned, can benefit from a lower tax rate, a greater U.S.-centric investor base. Small caps really did very well since the election in IWM, which had net losses or net outflows for the year. That erased, and we've seen small caps tied to the Russell and other indices gain traction. We've also seen banking ETFs. The Spider S&P Regional Bank ETF, KRE, saw over $1 billion in the initial day or two after the election. Investors are turning towards that deregulation benefits that KRE and the small cap exposure that it provides.
So Todd, that kind of tracks what we've been talking about here on CNBC, these so-called Trump trades. But in addition to equity-focused ETFs, or in addition to all ETFs hitting a record, specifically fixed income ETFs, they've also hit an all-time record, $270 billion in inflows. That one, it seems to be a bit more confusion because a lot of people kind of have mixed feelings about the fixed income market so far this year. What's the catalyst here putting so much money in these bond-focused ETFs?
So bond ETFs offer you the benefits of trading on an exchange, the liquidity, the tax efficiency. We've seen investors embrace those core broad building block ETFs tied to the aggregate bond index. And yet some investors are embracing risk on the interest rate side. TLT, the iShares 20-year Treasury ETF, has been very popular. The ultra short bond ETFs have been very popular, and we've seen actively managed ETFs from a number of firms hit new milestones. Capital Group, T. Rowe Price, Fidelity, all of them are having success with their active fixed income suite.
You know, oftentimes we talk about it's like kind of a comparison between actively managed ETFs and also passive ETFs. A passive ETF is obviously like the SPY, the QQQ. It just tracks the indice. But also, I'm hearing, especially from Invesco, there's growth in so-called factor ETFs where you know, it's kind of rule-based. Can you tell me what you're seeing there when it comes to those? And I think a great example of that is like the RSP, the equal-weighted S&P ETF, things like that.
That's right. So investors don't need to have just a market cap weighted approach with ETFs. So RSP is the Invesco S&P 500 equal weight ETF. Those same 500 stocks that you have in SPY and some of the other leading ETFs, but you spread that risk around. And we've seen strong adoption for that ETF. We've also seen some newer entrants, an ETF VFlow. It's the Victory Shares Free Cash Flow ETF. This looks at companies that have free cash flow and growth opportunities. And this ETF has just came to market a little over a year ago. It has over almost $1 billion of net inflows just this year. So it shows that smart beta index-based products can play in this ETF space along with active ETFs and market cap weighted products.
All right, according to VettaFi, ETFs, record inflow for the year, breaking the previous record, on pace for $1 trillion. Todd Rosenbluth, great to see you. Thank you very much. Appreciate it.
Thank you.